Hi, this is Michael Joyce from Agili, your personal CFO, and I'm pleased to share with you Agili's outlook at the mid-year of 2023. At the beginning of the year, I wrote a commentary where I quoted some lyrics from a 1970s song by the Five Stairsteps that said, "Ooh baby, things are going to get easier. Ooh baby, things are going to be brighter." And as we stand at mid-year, things are indeed a little bit brighter. The markets have done pretty well so far this year after being in a bear market last year. January was a good month, and for most of our clients, if they looked at their statements at the end of February, March, April, and May, it looked like not much was happening. Now, June's been a good month. But really, there was a lot happening. If you think about it, we had in March the whole bank drama that occurred, and in May we had the whole debt ceiling negotiations. We were always confident that they were going to come out with a deal to raise the debt ceiling. We just thought there'd be a little bit more brinksmanship, which would create a buying opportunity at that time. But if you look at the U.S. stock market, which is trading at this point mid-year at a little bit over, this S&P 500 is a little bit over 4,400. It's a little bit pricey right now, but that's the index, because most of the return so far this year has been very narrow. It's been driven by 7 or 8 stocks like Apple, Microsoft, Amazon, Nvidia, and these are all great companies, but they're a little bit pricey right now. A couple of them are trading at over 30 times next year's earnings. That is the earnings for fiscal year 2024, not even for fiscal 2023. And some are trading even higher than that. But if you take those 7 or 8 stocks out, the U.S. stock market is trading at a pretty reasonable value. If you look at stocks like Verizon or Pfizer or CVS Health, they're all trading at about 7 times earnings, and they're all paying really nice dividends. So this is not going to be a year, in our opinion, that you have often after a year where there was a bear market like there was last year, where returns are 20 or 30%. It could happen, that would be great, but we'd be very surprised about that. But it is a market that you should be selective. Don't fall for FOMO. The fear of missing out. On the other hand, don't be afraid to invest in securities that are more reasonably valued and have very good long-term prospects. Now, turning to the bond market, we continue to be very pleased with the yields that we're getting on bonds. If you look back, not even a year and a half ago, the 3-month Treasury bill was yielding 0.05%, which even Agili's summer intern knows rounds to 0. And right now, that yield is about 5.25%. So those yields are looking pretty good right now. And they're being driven by the Fed. We can talk a lot about the Fed. We can talk a lot about the inverted yield curve, which is often an excellent indicator of a future recession. But the Fed right now is probably close to the end of their tightening cycle. Inflation is coming down. It's not coming down that fast as we had predicted. It's going to take a long time for the inflation to reach the Fed's 2% target. But it is indeed coming down. As far as a recession, we don't know if there's going to be a recession. We've been recession skeptics for the past couple of years. There's been many prognosticators predicting a recession for the past 2 years. They said, in 6 months we're going to have a recession, and 6 months go by, and they say, in 6 months we're going to have a recession, then another 6 months go by, and they say, well, now we really mean it, there's going to be a recession. But as we've talked about over the past couple quarters, the service sector, which is a much bigger part of the economy than it was 40 years ago, back in Mr. Volcker's economy, that tends to be less volatile. And it's also been pretty resilient. So the service sector is indeed keeping us out of a recession overall, and that's a good thing. International markets are also up. In fact, by many indications, they're up more than the U.S. market is this year, and that's a good thing as well. The economies in some of the foreign markets didn't suffer some of the really bad consequences that many people thought, including us. And also the dollar's backed off a little bit, which has created a little bit of a tailwind for these international markets. But right now, their valuations are still pretty reasonable when you look at it relative to the U.S. stock market. So we are certainly maintaining our allocations in those areas. After the bank drama of March, a lot of people are wondering, how safe is my money in the bank? You know, they saw some runs on the bank on some pretty big banks, and they get worried about that. And for the vast majority of all banks, you shouldn't worry about that. Banks are pretty well reserved, and you know, you do have the FDIC insurance, so it's a good idea to stay under the $250,000 limit for the FDIC if at all possible. And I think most individuals can. Businesses that are running payrolls, that gets a little bit trickier, but again, for the most part, you shouldn't really worry about the safety of the funds that you have in the bank. What you should worry about is if you're getting any return. Many of the larger banks, many of the regional banks, are still paying on their money market funds 0.01%, which also rounds to zero. And as I mentioned before, treasury bills, very short-term treasury bills, are yielding over 5% right now. So if you're looking to get a little yield in very short-term securities, you should consider treasury bills instead of just leaving larger balances in your bank account. I also wanted to mention that very recently I was named as one of the advisors to watch by a publication called Advisor Hub. So I'm very pleased about that. Agili was listed as number 33 on that list, and we'll be talking more about that on social media in the near term. I also want to mention that 2023 is the 30th anniversary of Agili. Actually, March 1st marked our 30th anniversary. So for our clients watching this video, we are going to be sending out invitations to some dinners that we're going to have both in Virginia and Pennsylvania, so keep your eye out for that. So I've been very pleased to share with you our outlook for the summer of 2023. If you have any questions, contact your financial strategist at Agili or contact me. Thank you and have a great summer.